Hey guys, Dave with Moneyology here. Hope everyone is having a great day. This is the uranium sector review for September 20th, 2018. For those of you who have watched the videos over the last couple of months in uranium, know that it's been been over the last couple of years that uranium sector has been quote-unquote poised to break out, and every time it would do so, it would fall back. I feel that this time is different, and I'll show you why. In the last video, I pointed out many penny stocks in uranium that were really starting to break out, and it looks like the smart money has started to come in. And so we'll start by looking at the uranium ETF on a weekly time frame. On a weekly time frame, it's got multiple bottoms here. This 12 area on the URA has served as very strong support, but meanwhile, every single time it's been doing so with positive divergence. Is this the time that it breaks out? I mean, stay tuned. There's some positive signs. You see accumulation here. You see the PPO curling above zero. It didn't hit the same new lows last time. It hit similar price point. So I think that if this can break above 50 on the RSI, which will coincide with the middle Bollinger Band breaking above the 50-week moving average as well, I think that this is a very, very good sign. Of course, this is largely pushed by CCJ, which is Cameco, which is the major player in the uranium space. So how it goes will ultimately determine this particular ETF. But as you'll see in the various different charts we'll go through in this video, there are plenty of evidence that a breakout is generally taking place. Here's the URA on the daily time frame. Again, multiple bottoms here, but with positive divergence. In fact, when we hit a new low here, we didn't hit a new low in RSI. That's a very positive development. You're finally making new highs, multi-month highs here on the daily in the PPO. And now we're above the middle Bollinger Band. We are above the 50-day moving average, and really the next target is this 200-day moving average. Obviously, there's a lot of supply here up ahead, so this is not going to go straight up, but considering how much it's been suppressed, there's a lot of upside. Now, for shorter-term traders, the URA on the daily, or rather on the hourly, looks like it actually might pull back some. Now, why do I say that? And again, I'm going through this video for the very first time here, and so I'm seeing what you're seeing in live action. So where do I see this divergence? You notice this high here at 1275 hit momentum here around above 70. Well, now we're at a higher price point in the URA, but momentum has not been able to retake and recapture those 70 highs, which suggests that there's a pullback likely going to happen. How far it goes is anybody's guess. Perhaps maybe a break below the 50 and the 200 hourly moving averages around 1260, possibly as low as 1240. And you notice there's some distribution here going on, but nonetheless, this is a short-term time frame. The longer-term time frames are very bullish. So let's take a look at some of the names that are really starting to pop. Names that have consolidated for a long time. These are all weekly charts, by the way. So this is a very long-term time frame. Do your due diligence on all of these, please, before making any purchases with your own money. So multi-year base here, and it's starting to break. The momentum has broken out already, which is very positive development. We're about to break here on basically the 30 level, and if that's the case, this can go higher, much higher. Look at the accumulation here. This is a name that you definitely want to have in your portfolio or on your radar. Cameco is the major player in the space, and so this one has struggled because it's actually one of the only producers in uranium right now, and obviously the price of uranium has killed producers, but it's finding support at that 40 level, 38 to 40 level, multiple times that it's found support here, and this is the last time we rallied from a low of 760. It was at this precise point we broke out of, and now we came back and retested it from the upside, and sure enough, we're finding support here. You've got PPO starting to curl higher, so this could be a very good entry point here, around 10, and with a stop loss right below that 940 area, 938. So good risk reward entry for Cameco. Can-Alaska Uranium, CVVUF, another one that's starting to break out. Notice there's positive momentum. Right now we're right above the 50 RSI level, and we're at 27, whereas momentum is higher today than it was when we are at price points far higher than where we are today. PPO is about to cross zero. Very positive development. If this can break that 30 level, this is going to make a run towards 40 very quickly. And look at where it was just a couple of years ago. It could get there very quickly. DPLO DYLLF, another one that's making new highs with momentum. Very positive development. If it can break that 32 price point here, represented by that red line, 33, it can really pop considerably. A lot of accumulation taking place. Denison Mines, DNN, another one that's been basing since 2015, and it's finally starting to show a lot of life and momentum. You can draw a trend line here, and it's going upward. It's showing positive divergence. We're at 62 right now. At 57 price point, we were at 64 and at the same level. So positive momentum. This is not yet a buy. You want to buy it above 60 to confirm this breakout. But if it does, I think that next price point at 84 is certainly within reach. Encore Energy, one that we were pointing out, this base at 4 cents for a long time. A base with positive divergence is what you like to see. And we finally broke out. We consolidated here. We couldn't break below that 200 week moving average, and now it looks like it's primed to break above that 14.5 zone. When it does, and that could take a couple weeks. Remember, these are weekly time frames. Look at the accumulation. This can really go much higher. Energy Fuels, UUUU, another one that's broken out of a multi-year base, consolidating right below the 200 moving average. I firmly believe that this will see a $5 price target at some point this year. Fission Uranium, FCUUF, another one that's been basing for many years now. It's starting to show positive momentum. Now it's slightly above the 50 RSI level, which is what you want to see. This is not a buy until it breaks above the 60 marker with an initial target of 70. If it breaks above 70, that's when there's a lot of blue sky above. Forces Metals, FSY.TO in the Canadian Exchange. It's been building a multi-year base here, cup and handle, another base, and now it's breaking above that 25 zone with multiple higher highs in momentum. So this pullback should be accumulated. It's above, so long as it's above this middle Bollinger Band and a rising 50-day moving average. If this stays above the 20, I would say the 25 cent level, then that's not 25 cent level, rather 21 to 22 cent level should present itself as very, very solid support. So very nice entry here at the anywhere between 20 and 25, and the price target can be much higher should things continue to break higher for uranium. Couple more names here. GVX Uranium, GVXXF, another one that I've been pointing out for a while here. It's in this bullish wedge correction pattern. It's starting to look like it wants to break higher. If it breaks this downtrend here, as it's appearing to do, you've got the positive money flow. The first initial target is 20 cents, but if it can break that, this can rise to 35 cents in a day or two. I really like the setup on this particular chart. You've got positive momentum here on RSI with positive divergence. Momentum today is higher at 17 than it was at 20 and higher. So again, positive divergence. Laramide Resources, LMRXF is another one that's broken out of this downtrend here after cup and handle here. It's broken out and it's consolidated above this breakout point. So I like this here above that 25 cent zone. I think it's going to be making a run towards 40, possibly 60 in the next couple of weeks. Next on the list is Next Gen Energy, NXE, one of the best fundamental stories in the sector. It's been consolidating between basically $1.70 and $3 for several years. Look at the volume here. There's a lot of smart money coming into this particular play, a lot of international money. Do your due diligence on this one, but I like it a lot. It's now above the 50-day week moving average of 206. It's above the 50 RSI level, and this can make a run towards $3 very quickly. I get excited when this breaks $3 because that can make a run towards $5 to $10 shortly thereafter. Sky Harbor Resources, SYHBF, another one that's finally breaking out here. Look at the momentum. It's higher today than when price was at 42, and it looks like it's going to break above 40. When it does, 55 is the next price zone. URG, another one that's been consolidating for a better part of 2 years, finally breaking out here. Another sign that uranium is very, very serious here. So above 90 cents, this is a buy. Below middle Bollinger Band of basically below the middle Bollinger Band of 75, that's a sell. UEC, another one of the better managed names in the space, been consolidating through an upward pennant here, and it looks like it's going to make a run towards 2 very soon. Thereafter, $3 is a very reasonable price target, so it's a buy above 2. Finally, Western Uranium Corp, WSTRF. It's had a nasty downtrend from 217 to a low of 44. Kind of consolidated here for about a year and a half. Rounded bottom here, finally broke out above that 80-cent zone, and then boom, had multiple hammers here, and with momentum leading the charge, I don't see this stopping until 220, and I think this goes higher if it can break that zone. So as you can see here, guys, uranium is the story right now. We love the space right now, and if you have loose change, these are some names you definitely want to consider. Definitely do your due diligence, and best of luck with your investing.